In this presentation, we will continue on with our fairly comprehensive problem with the Capital Projects Fund and the government-wide activity. So far, we've entered the data related to the information on the left-hand side into the general journals, and we've created trial balances from them for the capital projects and for the government-wide activities. Now we're going to take the information in the ending trial balance we created for the Capital Projects Fund, and we will make financial statements from them, those financial statements being the balance sheet and the statement of revenues and expenditures. In order to do that, we want to format our worksheet, so we're going to work out a little bit on formatting the worksheet here. So we're going to scroll back over. What we want to do is basically just pick up this information, the trial balance. So we could then hide everything before that and after that. So what I'm going to do is go through here and put our cursor on A. I'm going to select all the way to M, and I'm just going to hide this. I'm going to hide everything we don't need so we can just be streamlined, just work with what we want. Then I'm going to right click on that and hide, don't delete it, hide it. And then we're going to be here. Now we could even hide column B and, these two columns, O and P, because all we need is column Q. That's what we're going to be working with. So I'll put my cursor on P or O to P, and then the op columns, and then right click on those selected columns and hide those. This is what we need. We're not going to be working with any of the government-wide activity, so I'm going to hide all of that information. I'm going to put my cursor on X and scroll all the way over to AG, let go, right click on the selected area and hide that. So now what we have is just the capital project fund. We just got the ending trial balance, and then we've got our financial statements. Now you don't have to hide all that to do that, but this will make it a little bit easier to practice just maneuvering around the worksheet, try to put everything side by side, make it as easy as possible on the eyes. Okay, so now we're going to be creating the balance sheet, and then we'll be creating the statement of revenues, expenditures, and changes in fund balance, like the income statement type account. And so let's scroll back over and start to build this out. Now, the first thing we're going to have is going to be the assets. We're going to pick up the asset. We only have one, which is going to be cash. Now, you might be saying, why don't we have current assets and long-term assets? Remember, it's a capital project fund, modified accrual basis, don't typically have long-term. Everything is basically short-term or current. Therefore, we don't need to break out the subcategories of current, long-term. It's assumed to be current. So we're going to pick up the cash then. It's simply going to be the cash. That's all we have. And that's going to be our total assets. So total assets then is going to be the sum of the one number cash. We don't really need to sum it. I won't sum it. And there is that. And then we've got the liabilities and the fund balances, which is of course like the equity, liabilities and fund balances. We're going to start off with the liabilities. I'm going to say liabilities and a colon here because we are going to have more than one of them this time. So we're going to say that this will be equal to the voucher payable. I want to put it in the inner column so that we can subtotal it in the inner column and then total it up in the outer column. It's a negative number over here representing a credit. We're going to make it a positive number, flipping the sign by saying instead of equals, negative of that number. And then we're going to have the contracts payable right below it. So we'll have the contracts payable. Once again, I want to take that number, flip the sign. To do that, I'm going to say instead of equals, negative of that number. And there we have that. And then we don't have the retained percentage, so we're good there. I'm going to go ahead and sum this up. So we're going to say total liabilities then. Total liabilities will then be in the outer column equals the sum of these items. There's our total liabilities. I'm going to underline this one. Let's go ahead and underline that. And then the next thing we need is the fund balance. So we'll put the fund balance below that. We're going to put this in the outer columns. We'll be in the outer column. And what we're going to do, remember that the fund balance is kind of like the retained earnings or the capital account if it was a sole proprietor, corporation or sole proprietor. So now we have the restricted is the beginning balance typically. And then when we close everything out into it, that would be the ending balance. So in essence, the ending equity, we could think of this a couple different ways. One way, you could think of it as all of the blue accounts. The credits minus the debits means there's a credit balance of $2,034,600. So that's what. So to do that, I'm going to say I want to flip the sign to make it a positive number. So I'll say negative sum, and then I'll just sum up all the blue accounts, the light and dark, blue. And there they have it, and there's our number. And then if we were to sum up the totals, then if we take the totals, then summing up the liabilities and the fund balance, we get to this 8,095,600. I'm going to underline here, and that of course matches. So we're in balance. Total assets equals the total liabilities and fund balance. So this is kind of our key number that we want to basically double check. Now, note, you might be looking at that. It looks a little funny because we have, remember, this encumbrance here, and we have the encumbrance down here that is hanging out there, and we're actually not going to include the encumbrance in the what would be equivalent to the income statement. So how can this work? How can we remove it? Because when we summed this whole thing up, we removed it on both sides. We removed it here in the equity section. We removed it down here in what would be kind of like the income statement type section. So we've removed it on both sides on the balance sheet. On the income statement, we're only dealing with these dark blue accounts. So we're only going to be summing up these accounts, and we're not going to include this at all. And so again, why does that work? Because we removed it from both sides basically on the balance sheet. So let's see what we mean on the income statement type account. So what I'm going to do is hide this statement now. Let's go ahead and hide this statement so that we can be right next to our statement of revenues and expenditures. To do that, we're going to put our cursor on W, left click, and then select over to AJ, let go, right click on the selected area and hide. So now we'll hide those cells, so we'll have these side by side. Now we got the statement of revenues, expenditures, and changes in fund balance. We are in essence working with these dark blue accounts down here. We're going to start off where we would think, and that would be revenue. So we're going to say revenue is going to be our top line, as it typically is in the income statement type accounts. We're going to put that in the outer column. I'm going to put it in AN. I'm going to say negative to flip the sign, and we're going to pick up that revenue number or revenue type. I'm going to make this a little smaller so we can fit it on one page here. And then we're going to have the expenditures. So we're going to go to expenditures. Now we might want to highlight these as we go because there's more of them. So I can make that yellow and say, okay, we found that one. And then we're going to go to expenditures. We're going to have a few of them. So we're going to make a colon subcategory. And the expenditures will be equal to the construction expenditure for B. I'm going to bring this to the inner column in AM6 equals that 18. And let's make this a little larger so we can see it. And then we're going to have the other item for the other expenditure for project F. And that's going to be underneath, and that's going to be the 10. So there we have that. And then we have the interest expenditure. And that's going to be the 4,004. So there's our expenditures. That's going to give us our total expenditures that we'll sum up. And we can highlight these and say we found a home for this, that, and that. Right click and make that yellow. I'm just going to say that there's a home has been found. A home has been found for those items. Don't worry about them. They have shelter. So we've got those three. And then the next ones that we're going to do, then we're going to have a subtotal, which is going to be excess of expenditures over revenue. So in this case, the expenditures are over the revenue. That's often going to be the case with the capital project fund because it's really there to track the expenditures, and we grouped the revenue, but most of our inflows aren't revenue. We're going to be having inflows from other sources. So other sources transferred in, which we're going to group somewhere else. So we're typically going to have an excess of expenses over revenue. And so we're going to say this minus this is going to be a negative number. Again, expenses higher over the revenue. And so there we have that. Then we're going to record like the other stuff, the other financing sources and uses. These would be things that we're not considering revenue that possibly transfers in from other areas. So we're going to say other funds possibly. So now we're going to say the proceeds from bond anticipation note. So we have financing here, and we've got the proceeds. This is going to be other financing sources, proceeds from bond anticipation note. So I'm just going to basically type it in there. So there it is. And we're going to put this to the inside, and I'm going to say negative of that 110, and then enter. And then we have that. I'm going to right click and say we found that. And then we have proceeds from the bonds. So proceeds from the bonds, gonna put that in place. And we are in AM13, I'm gonna say negative of that 29 and enter. So we found a home for that one. We're not gonna be doing anything with the encumbrances. So we're gonna skip down here to the other financing uses, which we had a retirement of the anticipation note. So that's going to be this. And now this one, I want to subtract it. So I'm going to actually put it in there as a negative number. So I want to flip the sign to make it a negative number because these are kind of like revenue. So in our plus and minus format, we want to make them positive. This is kind of like an outflow, which is in our other financing sources, uses in brackets. Therefore, we're going to make it negative. So be careful of the signs that we're using here. And there we have that. And then we're going to have our total, which is total other financing sources and uses. So we'll sum this up. Again, these two are going to be added minus the 110, kind of the revenue kind of items, minus the non-revenue, the expenditure more like item. So equals the sum of these. So there we have that. And then we're going to have another subtotal. This is going to be a long one here. It's going to say excess of revenues over other financing sources and uses over expenditures. So there we have that, because again, we have to list out all the subcategories we have rather than just having revenue and expenses. So we'll have a long subtitle name. So this came up to a negative number. This is a net inflow. So I'm going to say this plus this, and that gives us our $2,034,600. So again, remember, expenses were greater here, resulting in a negative. Now we have the inflows, which is typically the case because most of the inflows came from something other than revenue, bond proceeds and whatnot. So we have an increase in the inflow. So we got this negative plus the positive number, and that gives us our $2,034,600 on the positive side. Now, if we want to check all of our signs here, note we can't really use this number because that includes the encumbrances. And notice we're not including encumbrances here. We found a home for everything except the encumbrances. So if we wanted to check this, it would be, we could say it's the sum of these numbers not including the encumbrances plus the sum of these numbers, debits minus the credits or credits minus the debits. And so there's basically what would be kind of like our net income number, which ties out here. So that looks good. And again, you might be saying, well, how does this work? We're in balance because the debits minus the credits equals 0, and we didn't include the $2 million in our net income, which is part of basically what would be considered kind of like the equity or fund balance section of the balance sheet. Why? Because we didn't include this in the fund balance section either. So once we roll over our what equivalent to net income to the fund balance and we haven't included this, it'll go away. We'll see that right now by tying out to the fund balance right on the bottom of what would be similar to like the income statement. And so what we're going to do is say, well, let's add the beginning fund balance here. Here's going to be our beginning fund balance, and it, of course, would be this number. It's 0 because there's no activity in there. And that would be typically the case because this is kind of like retained earnings. We don't typically post things to it. And then we've got our ending fund balance is going to be here, and that's going to be this plus this. So no activity, no beginning balance. So that's going to be the same number. So now if we say, okay, there's our ending fund balance, that would be the sum of all this, the beginning balance plus the activity. You can see it this way. There's the $2,034,600, or notice we're not including this either. These two cancel each other out. So it could be this, I'm holding down control, this, not that, this. And then there's our $2,034,600. Because again, if you highlight the whole thing, it's just going to cancel each other out from the debit and the credit. Or just remove them both, it's the same thing. So that gives us to our $2,034,600. Let's unhide the balance sheet now just to compare it to the balance sheet. To do that, I'm going to put my cursor on Q, left click, and scroll over to AL, let go of the selected area, right click, and unhide. And then I'm going to scroll all the way to the right because I got a lot of unhidden stuff now. And so there's our $2,034,600. Here's our $2,034,600. So notice that's going to tie out from our statement of revenues, expenditures, and changes in fund balances to our balance sheet. And of course, our balance sheet then is in balance in terms of assets equal liabilities plus what is similar to the equity section, the fund balance.